And today it's another wonderful day, a Monday, 7th, wow, of July. Actually, today it's just something precise, something very simple. Like, I want to boggle up your mind into this investment journey. Think of it that you've invested 10 million shillings, and these 10 million shillings you've split it into three investment streams or three investment portfolios, whereby there's an amount you've channeled it to stocks, investing in stocks. There's another amount you've channeled it to invest in unit trust, and then another amount you've channeled it to invest in government bonds. Now, let's say the one that you have channeled to invest in government bonds is giving a 14% annual interest rate, and then let's say the one that you have invested in stocks is giving you an average of 9% interest rate. And then the one that you invested in unit trust is giving you something, let's say 12%. Those are annual interest rates. Now, let's take, for example, let's go with our example of 10 million shillings. In the 10 million shillings, you've invested something like 3 million in government bonds that are giving you an interest rate of 14%, which is an annual interest rate. That means at the end of the year, you'll be expecting approximately something like 420,000 there. Something close to that, not far from that. Approximately 420,000 there in return. And then the amount that you invest in a unit trust, let's say you invest in a unit trust an amount like 2 million shillings, invested in a unit trust, which is giving you a return of 12%. And in that annual 12%, you get an amount or cash value of around 240,000, around 240,000. That's an annual return from the unit trust, from the 2 million invested in the unit trust. And then coming now to the stock market, you invest an amount like 5 million. 5 million in the stock market, we gave it at an annual return, dividend return, interest rate of 9%, which will accrue to around 450 million. This is an approximation, but the specific figures are just close to that. 450,000. These are annual returns that you get. When you sum up all your investments from only those three examples I've given, when you sum up all the three investments, an annual return that you'll be getting in your account will be something close to or more than 1.1 million. That is passive income. You get passive income like that, yet you are assured of 1.1 million investment. And this comes aside capital gains. Remember, there are benefits that also come, like the capital gains. This is aside capital gains. There are capital gains that you will realize in the stock market, and also you can also be able to benefit much more on that because a whole year actually really means a lot in the stock market. Things can really bubble up and it becomes very bullish, and you reap also the great profits from that. So this is just an example that I've brought to you today in this video. Feel free to share your examples also in the comment section on how you can toggle up this investment portfolio. For me, I've given a portfolio whereby you invest in government bonds, whereby you safeguard your capital in unit trust, and also in stock market where you go full throttle and you go fully risk, so that you can be able to gain also the returns of full profits. Because when you go full risk, you also on the flip side of it, you also get full profit. So you can also share your rates and your preferred investment streams in the comment section so that we can be able to see how we can be able to bubble up and actually benefit from the low lying fruits that we have in the stock markets and also in the government bonds